One price is a very unique indicator. It takes the movement of overnight data and it compiles it into a single price. And what is significant about this price is its reaction to the market, or I should say the market's reaction to this price. We can go back through any day. We can go back 100 days, 1,000 days. We can look at today's, like this one. This is live real-time market, and what happens is an hour and a half before market opens, one price will populate on your charts. Now if you use NinjaTrader 8, it'll also display a statistical report on the bottom right of your screen, and it'll show based upon how many days you have loaded. There were 56 levels that were printed, so in other words there were 56 trading days, and of those 95% have been filled. What that means is that when one price prints, price in the market will get to that, in this case 95% of the time. Obviously if you change the days it's going to be different, but if we look at through the course of a year, it's going to be about the same, give or take a percentage or two. Now this is the ES. Every market's going to be a little bit different. This will work on any futures market, and it will also work on Forex. So futures and Forex, and the reason why is because what it does is it looks at in the Globex session, which is right here for me. So all of this movement happened overnight. So from this time, I'm in Mountain Time Zone currently. This is when the RTH opens, and then everything back here, all of this, all the way back to this vertical line here. This is when the Globex session starts. And so what it does is it analyzes all of this market movement and it populates a single price. And so basically what this price does is it says, based upon the overnight activity, this single price level is the most likely price for the market to come back to retest and have a higher reaction off of. So as you can see, we went to the tick this morning, and then we just continue to retest this. And right now in real time, we've bounced off of it to the tick, and we'll get a little bit of a bounce here, but we can go back through any day. So I'll just kind of scroll randomly. This day, right here, market comes up, tests it, and it drops off of it. The next day, market comes to it, to the tick, it just sits there, finally breaks, comes back for the retest, and drops off of it. Here's another day, market comes to it, it breaks a little bit, has a nice bounce off of it, it retests it right here. This one below here, so what happens is if the price doesn't fill on that particular day, the line will continue until it does. And so this particular price, these are very important price levels to know, because especially in this case where we have a price that hasn't been filled yet, what's going to happen is price will react off of it, just like you see here. So you can further look at, it took, so 82% of the 56 days filled on the first day. So the day that it formed, so today's price, that was one of the 82% that filled on the day that it formed. 86 took, just 2 days, and so the 95% comes within the first 10 days. Okay, so any one of these days, it's going to have the same reaction. We can scroll way back here and look at this day, and we can see price came up to it, broke it a little bit, had a huge drop off of it, came back up, tested it again. And so this is one of those indicators that you want to make sure that you have in your quiver, so to speak. We don't just sit there and wait for price to hit one price. That's not the approach. What we want to know is, where is that price level? It automatically is put on your charts, and then when and if price gets there, there's a trade there. And as you can see, we just kind of scrolled randomly here and see if I can just pick another day. Here's another day. These are money trades. So it broke it a little bit, had a huge reaction off of it. There were two prices from prior dates, and you can see the reaction off of these two price levels here. Huge reaction off of those. Here's the NASDAQ. So those of you that trade the NQ, same thing. Initially we had a nice bounce off of this, and we've tested it multiple times. Kind of acts like a pivot in this case. That was today. If we look at another day, we had it went to the tick, bounced off of it, broke it, and then it came back to retest it later in the day. Beautiful drop off of it, but it's really the same story. It doesn't matter if you look at Forex or if you look at one of the indices like the ES or the NQ, but it is a price level that you've got to use regardless of your style of trading. It doesn't matter if your style of trading is completely different than mine, or if you're just starting out and you're trying to figure out, what are some tools that I can use that are reliable. Well, this is extremely reliable. It shows you, there's not a lot of indicators out there that show you how well they're actually working. I would say 95% works pretty well. And because we're not quote unquote betting that price is going to actually get to one price or not, we're using it as a reactionary price level. It doesn't matter. The 5% that weren't reached doesn't matter because there was not a trade presented there. So one of the other things that you can do, so in the few minutes that we've just been doing this live, this is real time, we can see how price came back to retest this. Today it was at 27.28 on the ES, and it's had a nice reaction off of that. So there were, if this was all you used, which you don't necessarily need to do that, there were plenty of trades to take just using that single price level. No indicators, no confusing squiggly lines, just a single price. It populates an hour and a half before market opens, and that's it. It's literally that simple.